I'm just about to make my way to the Clear2Pay stand because their Sepa survey that they released during this EBAday event has been a very hot topic, and the results of which we'll find out a little bit more. We're going to go speak to Connie. Connie, it's been a big day for Clear2Pay.
Oh, it's a marvelous day. It's been a fantastic week, in fact. As you know, yesterday we launched the last call for Sepa survey. 107 banks gave their opinion and views on what's going to happen now that the end day really is looming. And what really struck us is that where half a year ago, the debate was still very much about infrastructure readiness, are our systems going to be able to cope? The focus has shifted completely to what it's all about, the end customer. And about 80% of the banks actually stated corporate customer is key, but yes, we recognize we need to help them a little more.
The EBAday event is the perfect opportunity to come face to face with individual bankers and ask them about their reaction to the Sepa survey. And how do they foresee successful migration to Sepa?
For me, it's just a question of services, how to help your customers to really get on board on the Sepa train.
End-to-end choreography in XML is the key to success.
I think for corporate clients to make real use of Sepa, you need to have a very resilient direct debit solution, including mandate management, but you also need to make sure that you help your corporate where required with potential conversion solutions for a certain time frame. The Sepa regulation talks about XML, which really should be the future format, but we do have a number of corporate clients that use ERP systems such as SAP, and they may want to continue initiating their payment files using this instrument. And as agreed with the European Commission, there is still ample opportunity for banks as well as third-party providers to provide relevant conversion solutions to support their connectivity to Sepa. So from an instrument side of perspective, it's the connectivity and particularly the mandate management in direct debits which will be very important to support corporates.
Do you want to see a better representation of corporates in governance structure?
Absolutely not. I think that the corporates today, they have so many problems of their own. So I think they want the banks to handle all the financial systems and handle all adjustment to regulations and legislations by themselves. They want the banks to be good suppliers of efficient, price-worthy solutions, and they won't help the banks with this compliance to legislation at all. That's what I think.
We're actually replacing our entire payments infrastructure in the bank. So we're looking to achieve Sepa compliance as part of that overall program rather than have a program specifically for Sepa. But unquestionably, this is one of the biggest pieces we have to do.
Over 90% of banks saw Sepa as an instigation for payment centralization. Do you agree?
Yes, I absolutely agree. The fact that you now have one instrument for payments, one instrument for direct debit on a pan-European basis at your disposal clearly makes sense then to use that from a centralized location. If you were to continue to use payments only domestically from local accounts in local countries, then the benefits of Sepa don't really show, because then you have one format, but you still do everything locally. If you do all that centralized from one account in one country, using one set of submission deadlines, cut-off times, regulatory rules and regulations, then Sepa really starts to pay dividends.
And then, Carsten, what effect does the current economic climate have?
It will likely accelerate the trend to centralization. If I look at the financial uncertainty right now, if I look at regulatory aspects such as Basel III, for example, that tells me that efficient liquidity management will remain a key topic on every corporate treasurer's agenda. So as a result of that, efficient cash management, efficient working capital management, all of which can be helped by centralization, will remain a key topic.
Do you see yourselves being more compliant, or is it part of your growth strategy?
It's very much part of our growth strategy. RBS is very engaged with our clients. Some of them are actually at the point where they know where they're going, so we're working with them to make sure that we optimize the migration, that we help them to hit the right end dates, sure that there's not too much impact. For those clients who aren't at that point in time, we're very much working with them one-on-one or in work groups to identify how is the best way to go forward. Is one account the right solution for them, or do they need to stay with multiple accounts maybe because of the local regulations? XML is the way of the future, and we need to make sure that our clients are actually addressing it properly so that they can maximize the benefit without having the disadvantages of having approached it in the wrong way.
So if corporate clients are needing to perhaps reduce their number of banking relationships, is this an opportunity or a hindrance?
Well, I think SEPA providing harmonized formats and standards for low-value payment transactions do indeed provide a corporate with an opportunity to think about whether they really need all of those local banks that they're using today under the local formats that exist. Because if formats align on SEPA and all the mandatory information is harmonized, then they may actually have the choice to say, I'm not going to work with all of those local banks, maybe just keep one, or maybe work with a more international partner in some of the regions. So SEPA, through harmonization, equivalently to the high-value payment space, which is already harmonized, does actually now provide the reality to centralize their banking relationships and reduce them.
The question of reducing account relationships is second, because when the ideal way or the ideal idea, so to say, of SEPA really is that you easily can change banks, move from one country to another. Even in one country you can move easily, and I think this is a much more bigger advantage than just looking at the at the single question of moving from one bank to another based on account relationships. So companies should rather look on their processes, look if they can harmonize their processes instead of just doing the simple exercise, well, how many accounts do I have?
Do you fear or feel threatened by the involvement of non-banks?
Whenever something happens unexpectedly, you are threatened or you are afraid. And I think the new entrance into the market is, of course, very much feared by a lot of established banks in Europe. But I think fear is blocking yourself, and if you're blocked, you cannot react. So I think what we should do, and what I would propose the right way forward, is that we get in touch with those new entrants, have their say, and try to interact. And of course, if you can beat them, you have to join them.
Do you see the SEPA end date as a blessing as a bank?
I think it's great. If I have the possibility to make a comparison, in Sweden we had a day H, 1967, and that was when we decided to start with right traffic. Imagine if we have said that everyone can do it at their own pace. Someone were driving on the right side and the other on the left side. It would have been impossible. So yes, it's a blessing.
I think it's a very good development, because it is enforcing the quality and the competitiveness of the European economy in a global perspective. And everyone has to be aware that this is the essential thing what we all do. So it's not individual business cases and profits and revenues. It's all about how Europe will stand in the future in the global business environment.
There's no doubt that we need to be ready well ahead of 2014 in order to be able to migrate those customers. But there's a little yin-yang at the moment as we look to how ready are we to engage deeply with our customers, and yet we have to start that process already. And for me, the last thing that came across in the survey was there's no doubt, like most banks, we welcome the publication of an end date, and we're pretty good as a bank in terms of getting programs with end dates done. But it certainly brings to life the realisation of just how much there is to get done between now and then.